Is it possible for a $3 stock to be the best opportunity in the stock market? That's what we're going to talk about today. So Nano Dimension stock, this is ticker NNDM, has been performing very well year to date. It's about double the return of the S&P 500. S&P 500 is about 15%. Nano Dimension is about 30% year to date. And a lot of that gain has come in the last 3 weeks. Although that 30% year-to-date gain is nice, it's nothing in comparison to Palantir, SoFi, Nvidia, Tesla, Meta, etc. Those stocks are up 100% plus. So is Nano Dimension a good buy right now, or should you stay away from it? That's what we're going to talk about in this video. There's some really great things about the stock. There's some not so great things about the stock. But first, welcome. If you're new here, I'm Austin. I'm a co-owner of CloudMusically.com, and I'm a stock market investor, of course. The channel's sitting at like 530 subscribers right now. I don't know where we'll be at by the time I post this video, but if you're one of those people, thank you so much. If you're not one of those people, click that subscribe button, help the channel out, help us get to 1,000 subscribers sooner rather than later. As a thank you for doing all that, here's a picture of both my cats, Millie and Luna. They're the sweetest things in the world. Millie's the gray one, Luna's the brown one. They thank you for subscribing. All right, let's get into this. So Nano Dimension stock, like I said, this is ticker NNDM. The stock is up about 30% year to date. And with the stock price being so low at like $3, it catches a lot of people's eye. I don't know why, it's just like a psychology thing. When you see a lower share price, people see a lot more opportunity in that. But a stock price being low, it doesn't necessarily mean there's more upside or more downside. It's kind of irrelevant. So if you've never heard of Nano Dimension before, they're a company that's largely a hardware company. They make the most advanced 3D printers that are around. Their main one is the Dragonfly. And the Dragonfly, their mission with this is to completely replace large-scale factories as they exist right now. And in their latest investor presentation, they show a picture of a huge factory, and then they're saying, you know what, you can replace all of this with just a few of our Dragonfly machines. That's their goal here. And that's the market they're playing in, the industrial sector. They're trying to help businesses become way more efficient with way less machines doing the same work in a shorter amount of time in a smaller amount of space. That's Nano Dimension's goal. In addition to the Dragonfly, they also have the Fabrica 2.0, which can generate teeny tiny little 3D printed pieces out of plastic. And then a smaller part of the business that's just gonna grow and grow over time is their neural network deep learning, which they acquired DeepCube in order to integrate this into all of their 3D printing. And then they have some robotics arms as well. So let me talk about 3D printing opportunity real quick. I do believe that 3D printing is the future of industry and the industrial sector in general. So Nano Dimension is on the cutting edge of that. They're not the only stock in this space, but they are doing it at a very high level with a high degree of success right now. Does that mean they're going to be the biggest company in the world? No, not even close. There needs to be a ton of progress into 3D space, and just the demand for 3D printing products is just not that high yet. It's still very niche for now. I do see a situation where 3D printing takes over more and more and more over the next decade, 2 decades, 3 decades. But we're still really early days in this. And that's evidenced by the fact that Nano Dimension's revenues are very small right now in the grand scheme of things. So I think it's important to understand that even though a company might end up being the leader in a space, you might not want to invest just yet until they've proven themselves. There was a ton of internet stocks whenever the internet was just becoming a thing. Are all those internet stocks still around? No way. Are the ones that were the big dogs back then still the big dogs now? No, not even. So a company in the long term might do great, but in the early stages of the business, there can still be a ton of risk in the business model, and it might be worth waiting it out and waiting and seeing, wait for a few quarters to play out and see if this company can continue to scale their revenues and take more and more market share and make sure that this is a company that's going to be around for years and years to go in the future. You don't want to buy a company and then 3 years from then, the industry they're in starts to flounder and now you're stuck holding the bag. A lot of the hype recently around Nano Dimension has been two things. One, they started mentioning that, hey, we did go ahead and acquire DeepCube and we use AI. So they wanted to let the market know, hey, we're an AI play too as well. Everyone loves to talk about AI right now. So if you say AI on an investor conference call, then you're gonna get a little bit more respect in the market right now because we're kind of in a big hype cycle around AI. The other reason they're getting a lot of hype right now is because they actually turned a profit in their most recent quarter, but there's something specific we need to check out with that, and we'll talk about that here in just a little bit. Let's talk about a few things that are really good with Nano Dimension that might be reasons for someone to buy, and then after that we'll talk about some things that are not so good that might want to keep someone on the sidelines with Nano Dimension. The first thing that a lot of people look at is just the market cap of the company. So this is a very small market cap company at 777 million, somewhere around there. And if you look at a few quick statistics, you'll very quickly see that the enterprise value is actually negative for this company. So what a negative enterprise value means is that the total value of their assets is greater than the value of the entire company. So the market cap of the company is, like we said, 770 million, somewhere around there. For them to have a negative 200 million enterprise value, this means they have to have more assets than the total market cap of 770 million. So let's go check out the balance sheet, because that's where we find assets and liabilities. We'd look at total assets, 1.2 billion. And right now, current assets, $1 billion. 412 million of that is in cash, and then 573 million of that is actually in short-term investments. So what these short-term investments are is something that could be liquid within the year. And for Nano Dimension's case, it's probably something like treasury bills, a money market fund, a CD, something like that, where the money is somewhat locked up, still pretty liquid, but it's actually going ahead and paying them some interest. So we can look at that on the income statement here in just a little bit to see that they're getting a lot of interest income. That's not a bad thing to do with the cash on the books. A better thing to do with the cash on the books is actually go ahead and use that to reinvest back into the business and grow this thing bigger and bigger so it can turn into a beast over time. But when we compare that 1.2 billion of total assets to the total liabilities, this is not just current liabilities, this is total liabilities, $49 million. Needless to say, this company is extremely well capitalized, and this is a very, very, very strong balance sheet. That insane amount of cash sometimes can actually be a risk because it might let investors know that, hey, maybe this company doesn't really know how to use the cash that they've raised to invest back into the business. I don't think that's necessarily the case with Nano Dimension. They like to make these acquisitions and kind of buy up companies and buy up stakes in companies. So I would say they're happy to keep cash on the sideline so that they can wait for a nice opportunity to come along so they can acquire someone else, kind of tuck them into their back pocket, just like they did with this Deep Cube for the neural network and AI software. So the balance sheet is in such an amazing spot that they have more total assets than the entire market cap. So you're basically getting this company for free if you're buying it right now. But there's more to the story. Let's talk about one more good thing that they've got going for them right now, and that is their revenue growth. So their compounded annual growth rate, it's like laughably crazy high. The 3-year compounded annual growth rate is 258%. That is ridiculous. And the way that they get this is by looking at year-over-year revenue numbers. So if we go back to 2020, they only had $3 million of revenue. If we fast forward to full year 2022, they had $43 million of revenue. So that's over a 10x in their revenues. That is ridiculous. Is the revenue growth going to stay that insane at a 200 and something percent CAGR? No chance in the world. But if we just see like a 50%, 40%, 30%, or even 25% revenue growth on a year-over-year basis, then this company could scale to insane revenues very, very, very quickly. So we know the balance sheet's in an amazing spot, and we know their revenue growth is insane, but what are some of the risks around this company? The big risk with this company is that they're an absolute serial cash burner. Let's look at the income statement for the most recent quarter. They actually turned a profit in this quarter, and I'll show you how that happened here in just a second. So we've got 15 million of revenue in the most recent quarter, and then the total cost of revenue was 8.3 million. Leaving them $6.5 million of gross profit. That's a decent profit margin, somewhere around 40%. That's pretty good, especially for a primarily hardware company that's in early days. But where it gets bad is the operating expense. The operating expenses are extremely high. So operating expenses are broken down into two main categories: SG&A, which is selling, general administrative, and then R&D. If you just take the SG&A line only, the SG&A line is more than the total revenue inside that quarter. And this is not a one-off thing. This is every single quarter, quarter in and quarter out. They're spending more in just SG&A than they're bringing in total revenue. But they're also doing the same thing with R&D. So with research and development, they're spending more in just research and development than they're bringing in terms of total revenues. That's a huge issue. So the operating expense is like 2.5 times what the revenue is. That's not a good sign. And remember, this does not take into account cost of revenue. So if you put cost of revenue into that mix as well, their total expenses on a quarterly basis are about 3x the revenue. This is not overly uncommon for an early days company, but it's definitely something to look at, and it certainly puts a ton of risk into the situation. So taking all that into account, we get an operating income of negative $31 million. So how did they turn a profit in the most recent quarter that they just reported? The way they turned a profit was from that massive amount of cash they had that they actually went ahead and put in short-term investments. So those short-term investments are paying them some interest income. They've gotten $56 million in interest income with about $3 million in interest expense. So that netted out to be $53 million, which left them with pre-tax income of $22 million. So that's how we saw the bottom line actually show a profit in the most recent quarter. That's awesome, but you know what's way more awesome? To get income from operations. Income from operations de-risks a business in a massive, massive way. Until we see income from operations, this stock is going to be inherently way more risky than a company that's profitable from operations. When you're profitable from interest income, that's not ideal, because in order to keep themselves profitable as a company, they're gonna have to keep a ton of their cash basically restricted in a way in these short-term investments so they can turn profit after profit after profit. That would not be the situation if they were having profit from operations. They can just run their business, and because they're running their business very, very well, they're getting profits. Some of that money is flowing through to the bottom line. We're not going to see that with Nano Dimension for a very, very, very long time. Let me be clear in saying that any profit is a good profit, but not all profits are created equal. We would much rather see profits from operation rather than profits from interest income. So can they keep that profitability up on a quarterly basis? Yes, but only if they keep that money in those T-bills or those money market funds or those CDs that they have right now. If they take that money out and they stop earning that interest income, they're going to show huge losses. They're just going to go straight back to huge losses because they're spending so much money in relation to what they're bringing in. So although the company might look cheap on a price to book ratio because of the insane amount of cash they have right now, they definitely don't look cheap on a price to sales ratio, somewhere around 16. I've seen way worse with way less growth, so it's not like it's disgustingly overvalued as it relates to price to sales, but it's certainly not cheap on a price to sales metric. So with all the good and all the bad, is Nano Dimension a buy right now? Is Nano Dimension a sell right now? Is Nano Dimension a hold right now? If I own shares, I would be a holder right now. I would not be a buyer, and I probably wouldn't be a seller if I did hold shares. I do not own any shares right now. This stock is on my watch list. I actually did have a position with Nano Dimension in 2020, and then it ran up to levels that I didn't feel comfortable with anymore, and I actually took a short-term profit on Nano Dimension, which I very rarely do. But right now, I don't hold any shares, and I'm not going to be buying any shares at least within the next 3 to 6 months. What I would need to see in order to go ahead and invest in Nano Dimension is, one, I would need to see their balance sheet stay in a very, very, very good spot. And two, I would need to see them bring the SG&A expense way down. I'm okay with them keeping the R&D expense high because they're an early days company. They're a very much innovative company. So they have to go ahead and spend a good portion of money to stay on the cutting edge of innovation as it relates to 3D printing so they can stay a beast company and stay on the front side of innovation. I would also need to see somewhere around 25 to 50% revenue growth for multiple quarters, quarter in and quarter out, probably for the next 6 to 8 quarters. That's 1.5 to 2 years before I would be comfortable going ahead and buying Nano Dimension. Although I do believe Nano Dimension is probably going to be one of the leaders in the 3D printing space, it doesn't necessarily mean I want to buy shares right now. Legendary investor Peter Lynch, the author of One Up on Wall Street, he managed the Fidelity Magellan Fund for years, one of the goats of stock picking, okay? He liked to talk about how you need to know the inning, so it's like a baseball analogy, you need to know the inning that your stock is in. Nano Dimension is in the first inning right now. They've just gotten to a stage where they're actually producing products that bring them revenue. So that's an extremely early days company. I think they probably went public way too early, and now they're having to try to prove themselves. That's why they're holding all that cash in T-bills. So they're a first inning company. I would like to invest in Nano Dimension in maybe the second inning or the third inning. And that second inning is going to be insane revenue expansion over the next few years and bring that SG&A expense down so that we can get closer and closer to profitability. The closer and closer this company is to profitability, the more likely I am to invest. And remember, I'm talking about profitability from operations, not profitability from interest income like on their T-bills right now. I'm not hating on the interest income idea, but I don't buy companies so that they can produce me interest income. I buy companies so that they can bring me a best of breed product with profits hitting the bottom line. So here's an example for you that Peter Lynch likes to use a lot. You could have waited 25 years after Walmart became a business before investing, and you would still have gotten a 10x on your shares, plus more than a 10x on your shares. 10x on your money is no joke. 10x on your money is life-changing amounts of money. That's Tesla type money. That's Nvidia type money. That is ridiculous. That's what people are chasing after. You could have waited 25 years. If Nano Dimension's really going to be the best in the game at 3D printing, and we don't have to buy today, we don't have to buy next week, we don't have to buy 6 months from now. Let's wait for the company to get in a better spot. Yes, they're well capitalized, but let's get the expenses under control. Let's go ahead and prove ourselves so that we can grow revenues and become a 3D printing beast over time. I want to see the stock de-risked before I open a position. So I'm currently staying on the sidelines with Nano Dimension. I want to hear what you're doing. Do you hold shares of Nano Dimension? Are you looking to buy shares in Nano Dimension? Are you selling? Are you shorting, etc.? Do you think it's the best stock in the world, worst stock in the world? Let me know. I want to hear about it. If you made it this far, you clearly enjoyed it, go ahead and subscribe. Thank you so much, guys, and have a great day.